information. Duly signed, there's someone who said about inspection and acceptance. Yes, this is the one that is supposed to be the committee that was formed, and they assigned that these are the correct goods and they are in the right order, they are okay as according to our request. If all of them have signed, is still accompanied with other documents. And original delivery notes, where someone said that, correct. Original invoice is all original delivery and invoice, all of them are from the supplier. And then valid contract. There's a valid contract that is supposed to be there between the supplier and the department or the user of the goods.
Okay. What we are learning is very intensive, but we are also knowledgeable because the comments coming in are very, very on point. We have Fatma commenting and saying an invoice and the purchase order, LPOs. Joanne says account details for payments. I guess she means the details of the person you're paying. And then letter of credit. Yes, from Fatma. Anatolia says the departmental request forms, payment terms, yes, Fatma, and inspection and acceptance from Ahlan. Thank you so much. Thank you so much.
We still have the document for payment. The other one was payment for goods. What about payment of service? An example of service is when maybe we are paying for our internet, that is a service, but still is procurable. Or when we are paying like our contracted services, like security, cleaners, that's still procurable, but is a service. The difference that is there between the document for payment of service and document payment for goods is for payment of service, only difference we need to have a copy of LSO, that is local purchasing, local service order. And the rest, we are supposed to attach all those other documents. Then just in case there is building and other infrastructure, maybe there is major construction that is being done. What are the documents that we need to have? We need to have a valuation of work done from building, surveyor, roads, electrical engineer, or director of work. Maybe we need to have a valuation of work done from the building, valued by the surveyor, the specialty in that field. Then we need to have a copy of BQ, that is bill of quantity, and then a certificate number, either first, second, or last. In this case, we mean engineer, if it's construction, is supposed in every phase, is supposed to give a certificate. Maybe the first phase was foundation, and the supplier is, the contractor is through with the foundation, is supposed to be paid the first phase, and the contractor gives a certificate of completion, that is certificate 1. And from there, he has done up to the rooftop, is the second payment is done. Meaning in every stage or in every phase, according to how the BQ was developed, in every stage, an engineer must give a certificate of completion. It's completed completely, and surely we are supposed to pay the supplier so that he cannot strain so much, is in the position to continue with the work that has been given. And if it is a tender document, if it's tender document, they need to be duly signed form of tender and form of agreement. Go to our next. We remember in our previous slide, I know we are together. We had the different mode of payment where we have a voucher and an imprest. Now we are going to this section of an imprest. And I would like to know what is an imprest.
Okay. We have all interacted with imprest at some point. What do we understand from imprest? What is an imprest according to you, my colleague? Please type in your comments. Just what comes to your mind when you hear the word interest?
Okay, I know we will continue just giving us our inputs, and we need to understand what is an interest. An interest is a financial document that is established for a specific purpose that will take place such as petty cash or travel expense. Just take this, we have a specific purpose that will take place. Meaning when we give when an interest is issued for an activity or for an official maybe trip that will take place in the future. But if maybe the activity has taken place, we don't issue an interest. We get that you have to give us the feedback, or if any relevant document, maybe it was an activity that was done, we must get the necessary documents like attendance, payment, so that's how you paid maybe the activity that you did. In that case, we write a refund, a voucher, but it's a refund for that activity. Or if it was a trip, we use that voucher that we talked about F22. We define with that. But if it's going to take place in future, we use an interest. We have type of interests. We have temporary interest, and we have a standing interest. What is a temporary interest? A temporary interest is a short-term advance of funds provided to an individual or department for a specific purpose. A temporary interest is intended for a one-time or a short-time use and may not be replenished once it's spent. It is often used for urgent or unexpected expenses that are not part of the regular budget. This is like an emergency. Something has cropped up. Maybe you have been called for a meeting in Nairobi. We just issue an interest. If the request comes in advance before that meeting, we give an interest. Then we have what is standing interest. A standing interest is a type of interest fund that maintains a fixed balance at all times. It is continuously replenished and has a predetermined amount available for ongoing expenses. At the beginning of every financial year, if there is an office that is supposed to have a standing interest, it applies for that standing interest. And that standing interest is replenished every time after it has been accounted for, after it has been spent and well accounted for, it is replenished for the whole of that financial year. At the end of the financial year is the time now it's completely surrendered. And now, in the other financial year, you can get another standing interest. But the purposes of this standing interest is to work like a petty cash. It's for today, the small operation here and there. From there, we are going to learn about IFMIS. Still, IFMIS is one of the integrated
Thank you.
and then we need to
First one for a particular purpose. Okay. Okay, Sarah, you'd like the slide? Let me just note your email address. Thank you. Yes. Participants, please continue posting your comments and any questions you'd have. We'll have a brief discussion after this session.
What is an IFMIS? An IFMIS is an integrated financial management system which was started from 2014 after devolution. And it was started purely on 2014 after devolution to the counties, after the devolution, to all the counties. But initially, maybe someone will ask me, initially it had been practiced at the national treasury, but to the county government, it was we started after devolution. And we need at least to understand what's happened in the IFMIS, because most of the time we tell our fellow colleagues that will be paid through IFMIS. We need now to understand what are the procedure, or what is the process that takes place in the IFMIS. If we want, and in this case, I will concentrate on government procure to pay. If we are procuring to pay, how is the process through the IFMIS, our IFMIS level? Is the big slide. It has 2 pages. It's from number 1 to number 28. But anyway, I will take the shortest time possible, because it is still the same with the other one, which is manual. But in this case, we are doing it in our system. At the beginning of financial year, we need to have a procurement plan. A procurement plan is prepared. And after the procurement plan has been prepared, it is approved by the chief officer in the department. And after it has been approved by the chief officer in the department, it is uploaded the IFMIS. In this case, this procurement plan is all the goods in the department that we go through procurement method. That all the goods and services that we take place through the department, in the department. And what guides us? At the beginning of every year, we prepare annual work plan. And at the same time, we prepare annual development plan. This is the one that is going now to guide us to come up with the procurement plan. The next stage after the procurement plan has been uploaded in the system, we have a requester. Even in our department, we have the requester who now requests the things in the department. He is given different requests from different officers or different units, and he uploads the request in the system. After uploading the request, the same way, the accountant approves whether there is fund or was it planned for. After the approval from the accountant, the AIE holder approves the requisition. Everything done in the system. After the AIE holder approves the requisition, it's taken to the procurement department. I think we need to have maybe another session for procurement methods that are used in a very interactive session, maybe with one of our procurement officers. We select procurement methods that we're going to use. It can be direct, it can be through RFQ, that is request for quotation, request for proposal, open tender, restricted tender, low value procurement. But in most cases, maybe in our area of coverage, we maybe go to the direct procurement or RFQ. Example of direct procurement is like GEMS. Definitely, we know when we're purchasing little goods, we are supposed to purchase them through GEMS. This is one of the examples of direct procurement. After we select the methods that we are supposed to use, the head of supply chain approves the method that has been chosen. And if that's if it's a service or if it's a tender, if it's a good, if it's of a given threshold is supposed to be published. Sometimes you normally see in our newspaper, you can see different advertisements, and this we are now publishing of sourcing